Hey everybody, it's Eddie here, and in this video I'm going to be going over my entire portfolio along with my top 5 holdings, why I hold them, and my investing strategy for the next 6 to 9 months. So if that sounds interesting, definitely stick around. Just a reminder that I am not a financial advisor, nor anything that I share in this entire video financial advice, so make sure you also do your own research and due diligence before you make any sort of investing decision. This is just me sharing my investing journey and process with you all, so if you appreciate that, give this video a big thumbs up, but let's look over my holdings. Here are my current holdings, and at the time of making this video, my top 5 crypto holdings are going to be Bitcoin, making around 41% of my overall portfolio. Second is going to be Ethereum. Third, Cardano. Fourth is Oasis Network. And fifth is going to be Polkadot. As you can see, I'm sitting around 25% in cash, and I'm continuously accumulating my cash position. And I'll be sharing what I'll be doing with my cash in the later half of this video. But let's briefly go over my top 5 holdings. So number 1 is Bitcoin, for obvious reasons, right? It's the most decentralized. It's the first cryptocurrency ever created. It's the most trusted. Second is going to be Ethereum because it's the largest layer 1 blockchain today with the most amount of utility compared to other tokens. I've gotten a lot of comments and hate on why I don't hold Solana in my portfolio, and that's just simply because I like Ethereum more. Third is going to be Cardano. Now, Cardano definitely makes up a lot more than I would like it to be, but it's definitely going to be more of a high risk, high reward play. I really like Cardano just because of the founder, Charles Hoskinson. I've mentioned this many times in my video. I just love his love for the industry. On top of that, his slow and steady approach of making sure that he does things correctly instead of rushing them. Next is going to be Rose, also known as Oasis Network. Now, this is definitely a high risk, high reward play. I'm fully aware that this project can go to zero, but if it survives the bear market and there are more developers on top of Oasis Network, I could see this being a very high reward play as well. Oasis Network is also a layer 1 decentralized blockchain, very similar to what Ethereum and Cardano is doing. They have a ton of partners and integrations, Binance being one of them. They are one of the earlier supporters of Oasis Network. They also partnered up with Facebook, also known as Meta, and they are also supported by the Vietnamese prime ministers and government. And I'm earning around 10% annualized on my Rose staked, which is around $173 at the time of making this video. Obviously, the dollar amount will change depending on the Rose token price. And then fifth, we have Polkadot. Now, by nature, every blockchain has limitations, but through the relay chain on Polkadot, a lot of these blockchains will be able to communicate with one another. For example, when you go to an airport, there's a ton of different airlines, but they are all able to communicate with one another through the technology or software that they use on what time they take off, what time they land, connecting flights and communicating that with passengers. Polkadot, to some degree, is that technology software for the crypto world. And for the rest of my holdings, I have CRO, Chainlink, Polygon, XRP, VeChain, and 0.43 makes of other smaller altcoins that I hold on my other accounts, which totals up to around 8% of my overall portfolio. If you're wondering what website or app I am using to keep track of my entire portfolio, it's called CoinStats. They are a partner of this channel, and if you do use my link down below, you can save 25% on your overall purchase. If you only use like 1 or 2 wallets, then CoinStats may not be that useful for you, but if you're like me who uses multiple different exchanges and accounts and need to keep track of what you are holding, then CoinStats is going to be perfect for you. There's a ton of wallets and exchanges that can connect with, including your cold storage like a Ledger or Trezor, but you can scroll down, you can look at what you need to connect it with. If your exchange or wallet does not exist, then you will have to add it manually. When it comes to investing, it's never about how much you own. It's always about what percentage of that makes up of your entire portfolio. When I look at my portfolio, it lets me know what to invest more of and what not to invest into. Just because some of these altcoins are on great deals doesn't mean that I should jump into it, just because my goal right now is to increase my Bitcoin allocation. So if you're interested in checking out CoinStats, check out the link down below. Now let's go over the cash that I'm currently holding, which is around 25% of my overall portfolio. So right now we are in a clear bear market or a downtrend, and during those times there are 3 things that are best to do. First is to accumulate cash. Second is to dollar cost average into the market on a regular basis. And third is to hold throughout the dips, especially if you are a long-time believer and investor. Whereas during a bull market, you're trying to 1, get rid of your cash, 2, choose lump sum investment over dollar cost averaging, meaning it's better to just invest a large amount instead of dollar cost averaging up. And third is to buy any dip opportunities. Since we're in a clear bear market, I'm going to be doing what I explained first, which is to accumulate cash, dollar cost average on a regular basis, and hold and invest long term. My current cash position is sort of spread out across my bank, Binance US, and FTX US. If you're wondering, US dollars held within Binance US and FTX US are FDIC insured, so I don't mind parking my cash there for a little bit. The nice thing about having an exchange like FTX US connected with Coinstat is that anytime I make a ACH deposit with my bank, for example, let's say I want to deposit in $1,000, click on deposit, which if you're interested in signing up for FTX US, I do have a link down below where you can save 10% on your trading fees. Now my FTX US is holding 25.9K. If I go back to my CoinStats, it says 24.9K, but I can click on sync and it immediately updates your CoinStat account. But now I want to share the strategy behind why I'm accumulating cash. So this is a chart or a model that I created within my Patreon group to keep track of market momentums, dividing them up into 450 days. Now 450 days can seem a little bit random, but this is kind of the number that I found to work well in terms of blocks and sections. It's a very simple model where these yellow lines over here represent the Bitcoin halving, and between each Bitcoin halving, there's a green, red, and yellow block. Green, red, yellow, green, red, yellow. And the Bitcoin halving occurred within or close to the green box. So the first time it was in the green box, yellow box, but very close to the green box, and the fourth time it will be in the green box as well. Now the model doesn't time tops and bottoms, but what it does is it gives us a good idea of what we can expect during that season. So green is generally a bull market, green up. Red represents red market or bear market. Yellow typically means a sideways consolidation market or a slightly upward momentum. And then we have the same thing happen all over again where green is bull market. Red, obviously we had some bull market action over there, but ultimately, from a macro point of view, it's a bear market. Yellow represents sideways, slightly upward momentum. And then we have the whole pattern over again, where green, we have a bull market. Red, we have a bear market, and sometime in October of 2022, we'll be entering the yellow zone, which signifies a sideways consolidation or slow uptrend. So I do expect us to bottom out anywhere between now, at the time of making this video, until October of 2022. We have the next Bitcoin halving sometime in April of 2024, which has always been a huge catalyst for the next bull market. So the rest of 2024, maybe until the end of 2024, entering into 2025, I do expect us to top out. What price? Who knows? But historically, if you accumulated in the yellow zone, you would have done well once we entered the green zone. So that is why for the next 6 to 9 months, I'm going to be dollar cost averaging every single day on a regular basis. So that's anywhere between 200 to 270 days as late as April of 2023. I've already been accumulating on a regular basis and I will continue to do it as well. So that means I'll be accumulating during this season over here, which is equivalent to almost accumulating during this range and over here during this range between the red and yellow box. If Bitcoin decides to have another huge sell-off, that's when I'll probably add and accumulate much more aggressively. And if Bitcoin decides to continue higher, that's totally fine with me because I've been dollar cost averaging every single day. You know, by the end of July, the Fed is going to be coming out with GDP numbers and it's most likely going to come out negative. That means that we are officially going to be in a recession. That's when they'll most likely announce that we're in a recession. That can cause a mild panic, but I feel like a lot of it's already been priced in because it's obvious that we are going to be entering into a recession. Who knows how long? You know, the shortest recession that we've ever had was in February of 2020. It lasted only 2 months, but on average, it can last anywhere between 8 to 11 months, which lines up with my accumulation range. So if I'm accumulating during the recession, then I'll most likely do well once we're out of the recession. You know, I know 2024 can seem like a long time away, but we're already halfway through 2022. Next thing you know, we're going to celebrate New Year's. It's going to be 2023. Just wait one more year after that. I remember during this period over here, 2018, I was like, gosh, the next Bitcoin halving is going to be in 2020. That's like 2 years away. That's going to take way too long, but it came a lot sooner than I thought. The biggest mistake I made was not accumulating enough during this time because I got in pretty late in 2017. I experienced this whole crash and I thought, man, what did I get myself into? So I didn't invest as heavily as I should have during this period. And then once we've hit like 60K in that range, I was like, shoot, I should have invested a lot more during that bear market time. This time I'm not making that same mistake. So I'm accumulating a lot more heavy. That way in 2024, I'll know exactly, or I'll have a better idea of when to take profits. Right now, my main focus is Bitcoin. So I'm dollar cost averaging heavily into Bitcoin. I'm still DCAing into Ethereum a little every single day. I'm still waiting for one more sell-off. I hope it comes, but if it doesn't, it's totally fine. I would say about 1/6 of my US dollar, which is around 4%, is going to be allocated towards Ethereum, and 21% of that will be allocated towards Bitcoin. So hopefully my Bitcoin holding will make around 60+% of my overall portfolio, Ethereum being no more than 15%, and everything else follows. But with that said, hope you all enjoyed this video. If you did, please give it a big thumbs up. If you have any questions or comments, leave it down below. I would love to know in the comment section down below how you are strategizing during this bear market. Also, if you're interested in learning how I'm navigating through these markets on a daily basis, check out the Patreon group link down below, and check out the CoinStats link down below to get 25% off your entire purchase. I'll see you guys in the next video. Over. Good night, good morning. Adios.